Happy New Year, everyone. Let's go ahead and get into it. This is going to be the NQ113 2025 trade review. And this, as of now, is my largest trading day ever on my personal account. This was a $38,000 trading day. And I also had my largest trade of $30,000 today as well, which is surreal. Thinking back to when I first started trading in 2018 and seeing, that point zero 0.01 micro lot traded and just making 50 cents, I was like, oh my gosh, I saw the potential. And now seeing that investment begin to vest in large quantities is it's amazing to see. But without further ado, let's go ahead and get into it. Regularly scheduled programming. The principles. The principles of this trade were the structure principle. Ideally, what I was focused on was the liquidity grab of daily or macro level liquidity, which led to a reversal. And then also the liquidity principle. This was a macro trend liquidity mitigation, and I'll get into that a little bit later. Trade, and these are the two principles that were at play here. The trade idea. This was a micro trend reversal trade. I'll explain that a little bit later. Inside of that, we were looking for what I was looking for was range solidification of a current bearish macro trend. So this is a macro counter trend trade, which 20 in the grand scheme of things, 80% of your trade should always be continuation. It's what I was taught. 20% can be reversal. So this is actually an example of that 20% trade. And when we get into it, it's going to look a little weird. You're going to be like, oh, Brennan, why did you say this is like counter trend? But if you look at the overall, I understand that. I'll explain that. All right. Now, from the top down analysis, started on the daily, identified my macro trend and my liquidity, and then I executed the trade on the 2-minute. Okay. So the trade. From the 20-minute perspective, this is what it looked like. The green box here is where I executed the trade, which ended up being a 2-minute sponsored candle, which mitigated another 2-minute sponsored candle 50%, and then targeting this liquidity here at this high, this first high, second high, and ultimately I was aiming for this sponsored candle here, but decided to collapse the trade to go ahead and secure profit and, have my largest trading day. And so this ultimately ended up being a 21, almost 22 to 1 trade setup. Had 125 pip stop, which is normal on the NASDAQ, 2,735 pip reward. That's how you would read that if you're looking at this long position tool. And yeah, it was a really, really good trade. Like I said, it was counter trend. So there was a lot of weathering of the storm here. As you can see, this is very, very sloppy price action. Very consolidated is really what I should say, compared to this bearish run here where you can see these are clear, large bearish candles and the price runs are really, really smooth, whereas this one was really choppy as we move back higher after mitigation of liquidity on the daily perspective. And so the 2-minute, what it looked like was this. We had first mitigation of a 2-minute sponsor candle, 50%. Can't draw. And then we had the mitigation of the open of this 2-minute sponsor candle here, which is where I executed the trade. It was beautiful. And then also want to note that we have liquidity resting just above this here. And the reason why I chose this 2-minute sponsor candle over this one, well, 2 reasons. I didn't see this at the time. Second reason, you can see a clear mitigation of a sponsor candle or of a previous liquidity point. And then we have uninterrupted price action to the upside that cleared a previous high. And based on that, this generated my range from low to high here on the micro perspective. And then we generated liquidity, but because the origin of the move is unmitigated and adhering to the principles, understanding that price won't leave a range until it's balanced, I took the risk, set a limit, entered in at the 2-minute, or set a limit at the 2-minute open of this sponsored candle, had my stop loss below the low, and then ultimately that's the trade that played out. So let's go ahead and get over into TradingView to look at this live and explain a little bit more of what's happening and go through the entire process. So as I said, currently, if you look at this, from, zooming all the way out, yes, NASDAQ is bullish. But I'm not trading on that level, and one of the main things that you want to identify when you're looking at trades is you really want to look at a 3-month time frame. I learned this from watching one of the YouTube videos. I'll find it and I'll post the link probably in the description of this video, but it really framed my mind around not looking at so much data and understanding that investing is different from trading, whereas trading, you really want to look at a 3-month window. Anything above that, you're really looking at investing or very long-term plays. And so this right here, this 3-month from November here to January is about 3 months of data. And so that's where I really began to frame up how I was going to look at the NASDAQ price action on the macro perspective. And so in doing so, this is how I identified the low, high, low, high, low, high, low, high. And based off of this price action, noticing that we broke this previous low there, transitioned from high to low, so from a bullish into a bearish macro trend, high, low, solidification of the range, low, high, play, and then now we're playing down in here. Ultimately, we are, from the macro perspective, in a bearish trending market at the moment. That means we could reverse, but as of right now, my bias is towards the downside based off of the price action that occurred here on the daily. And so framing up this trade setup, you can see that this is going to be a counter trend based on that bias. So I actually ended up taking a couple of trades today. The first trade was a success and continuation of bearish trend. It was a $8,000 trade, and then took a couple losses trying to anticipate price reversing to solidify the potential of a range, because I'm looking for something up inside here. And ultimately, what I should have done was adhere to the liquidity principle, and I wouldn't have taken those losses. First thing that I will point out is there were 2 liquidity points on the macro perspective that needed to be mitigated. The first one, which was here, was unmitigated at the time that I was looking to take buys. And so I was really tripping because I was like, what am I doing? Like, why am I taking buys and price hasn't reached this liquidity point? And I always want to target these macro liquidity points. And then I want to wait for the reaction that occurs off of these points to understand if we are going to break structure and continue trend, or are we going to essentially grab liquidity or perform a liquidity grab and reverse. And so I anticipated reversing here, which I really should not have anticipated. I should have reacted. And I took a couple losses as price, continued flowing down here after I took that $8,000 trade. Then ultimately price mitigated this liquidity point, and this is where we started forming that reversal pattern in the microstructure, which began on the 20-minute time frame. And so this is what I mean by understanding that the macro, you can see that these clear runs here indicate bearish intent, bearish price action. And so it's going to take some sort of consolidation and some sort of bullish structure to form in order to begin pushing price back up in the opposite direction. And this all occurred after we grabbed liquidity from that daily liquidity point or structural point there, notated by this black line. And so I actually took a few losses, few wins here inside of this consolidation, but ultimately you can see that price came down, mitigated, broke even, took a couple losses trying to trade inside of this, and then took a step back and was like, all right, what's price really about to do? Ultimately found the breakout after we grabbed liquidity, which is everything that RCV teaches, right? Wait for the solidification of the range. If you want to look at this, you could probably find the Wyckoff schematic in here somewhere. But we had the solidification of the range after mitigation of liquidity, rocket off, clear the high liquidity, creating the range from this low up to this high here, right? So that's my micro range. And ultimately, after looking only in the discount side of the range as I'm looking for buys, I ended up finding the origin of the move, which was this 2-minute sponsored candle, and that led to the trade shown on the chart. Overall, like I said, this was a counter trend trade. I wouldn't recommend trying to take too many of these because there is a lot of noise that ends up occurring. You're going to end up being in a lot of consolidation. Not the price runs won't be very smooth compared to if you're trading pro trend, and it really weighs a toll on the brain if you're not, I guess, experienced in trading counter trend. But I would really recommend sticking to pro trend trades. But in this case, everything fit for this trade, so I ended up taking it, and ultimately paid off crazy. So yeah, that is the NQ 113.25 trade review. It's been a great start to the year. So I had my largest trading day before this on Friday, which was $14,000 trade. Was another great trade. That one was a pro trend trade. I took 2 positions on that one. I'm not going to go over that. And then 2 days later, Saturday, Sunday, market open, took this trade, 1 position, and yeah, I'm going for it this year. Let's have a great year, guys. Peace.